Mark the Meerkat suffering in for Des one more time here with the weekend review for the week ending June the 19th, 2015. Well, Des is on the West Coast, and again, tonight, Friday night, is the big fight with Ken Shamrock. That's on Spike TV. That's Spike TV. Tonight, 9 o'clock is when it starts, and they're on the ticket for tonight. That's Ken Shamrock. So you can see Des, if you like, right on TV. Let's take a look here at the markets, what they did today, what they did this week, and what they did in the context of the charts. First, let's look at the numbers here. S&P today was down 1%. The Dow Jones Industrials were down 0.88%. We have the Qs down 0.69%. So it gave back a lot of its record close high yesterday, gave a little bit back. Then the small caps just about break even from its all-time high close yesterday. Bank, however, was up 0.18, so not quite as bearish on the markets. And we've got the VIX was up just 1%, and so it did not confirm the move down by the major markets. And we've got silver and gold just down slightly, and oil down 1.6%. Yeah, it's dropping down. It's staying in this $60 a barrel range, plus or minus $1, has been for a while. That $60 is a threshold price for oil, and above that area there's some marginal operations that can get back into making money, and below that area, which is where OPEC wants it to be, it can flesh out some of these marginal operators. So $60 threshold type of price. Let's look at the S&P 500 daily chart here. Out today, it was a down day, and it closed below the moving averages. That's not so good. But take a look at volume. Even though this was options expiration day, it was lower volume than yesterday's big up day. So that's good, but still strong volume. So that's a little more bearish. Again, we are inside of a symmetrical triangle here on the daily chart, and that is a bearish formation. And we've come down and tested that lower trend line a couple of times now. We're going to do it again next week, especially given all the Greek situation we talked about yesterday. Then let's look at the Dow Jones Industrials on the DIA. And it was in a symmetrical triangle yesterday. It busted out on big, huge volume. Today, pulled right back. And where did it stop? Right on that line. Remember, the lines that were once resistance can now become support, and lower volume down here. Then we've got the Qs. Again, it was up big yesterday, was up to all-time highs, and it pulled back today, inside trading day, inside there, so not quite as bearish. And but look at volume again. Even though option expiration day, much lower volume than yesterday's all-time record high close. Then we have the small caps basically finishing even on the daily chart here. You get a little bit of a doji right there. So, so it remains bullish. And again, look at volume, much lower than it was as it took off here. So the market snapped a 3-day winning streak, but it wasn't too bearish. There's a little bit of a pullback and profit taking today. All right, let's take a look next here at the weekly charts. And we've got the SPY here on the weekly chart. Let's stretch it out a little bit here. And you can see we're in a down leg. This is not a swing low yet. We have to have one more of higher highs and higher lows. So this lighter, thinner line here is the rising wedge on the weekly chart. As soon as we get another one here, then it can be a swing low, and then we can be able to use that. But again, in a bearish formation. And again, we talked about this earlier this week. It is beginning to roll over here on the weekly chart. As you can see, as we connect the swing highs, and it's losing momentum. The S&P was up a whopping 0.2% for the week. Then we have the DIA on the weekly chart. And again, in the big scheme of things, it is in a rising wedge, but we're actually below that. We're in a down leg here on the weekly chart. Again, we haven't turned around here yet, so when we do, then we can move this line over, but not until we actually have a swing low. And the Dow was up a whopping 0.3% for the week. Now the Qs then, they closed at all-time highs here for the week. Now we're looking at the QQQ rather than the actual index. We don't have a close on that yet on this platform, so I'm using this one. But again, within this, we're in a rising wedge on the weekly chart, these lighter colors here. And it's broken below, and it's in a down leg, but we did come back. This week up 1% on the Qs, 1% up on the Qs this week, so they were definitely leading the way up this week. And then the small caps, which again close at all-time highs. Look at this weekly chart, kaboom! But it was only up 0.4% for the week, and it is not in a rising wedge like the others. It's in an ascending triangle, and it just broke out from there. So that's looking a little more bullish on the small caps. We do have a V newsletter that we look at each and every week, and we give you a bull list and a bear list. Here's just a couple of stocks of interest. This is the AMBA that I talked about earlier this week. Oh, let's go back to the daily. Here is the AMBA that I talked about earlier this week here on the daily chart, and it was just kept on running up here, and then bam, today it was down. It's whopping 6% today. So it's been a darling here because of its cameras. But we'll have to see. There was one that IPO this week as of yesterday, Fitbit, F-I-T. And yesterday it would roll around here around the $30 mark, and then kaboom today. If you take a look at my trading video for today, I did it on one of the trades on Fit that we had this today. Look, it ran all the way up here almost to $34. During the day, and it settled out at $32.50. Now here's one from our bull list on our V newsletter. Look at this here, and here was a setup on the weekend, and kaboom! Look at that, straight up for the week. And let's see here, a total of 8.3% for the week on ANET, A-N-E-T. And then one from our bear list side. This one was down over 10%, and that was EGN. And again, bearish, and we're in a bearish setup right here, and then bam, bam, bam. Wow, really dove down right here to the 200 period moving average. So just give you an example of some of the biggest movers for us this week on our V newsletter list. Hey, if you'd like to learn to trade better, I'd love to be your mentor. It's a 3-step process to do that. Let's take a look at what those steps are. The first step would be to go to our site, Free Online Trade Education, and right here on the front here, we talk about starting with the 101 trading courses. It's free. You just put your name in here and hit submit, and they'll come to you lessons every couple of days, so that you get a chance to go over them. Now they're about 40 minutes to 30 minutes each. And then it gives you the basics about what trading is. And then the second step is to go to the 201 class. Right here under Structured Education, we want to do Structured Education right here. It takes us to our Grok trade. And here's the 201 structured course. And this one, there's a tuition for it, but this is where we get into how to trade. And it's a video based. You can do it at your own pace. You can go over as many times as you want, and this is what's preparing you for what we call the Hipsy Pipsy, or the number one thing, and that is the 301 mentoring. And 301 mentoring here is we do it live, either online or live in a classroom, and it's lifetime mentoring, folks. And if you want to know more about it, you can go to this page here and read all about it on the 301 mentoring. It starts with 3 days of training, but it continues on with ongoing coaching and mentoring from that point on. And I'm one of the mentors there for the 301 program. So if you want to know more about that mentoring program, in fact, we have one of them live coming up in Las Vegas here on July the 25th, 26th, and 27th. So you want to come to Vegas and be with us in the same room. Actually, this video right there was taken at one of those trainings. Put your name and information here and hit submit. And Carolina will give you a call. Not a sales call, but she'll interview you and see if it's appropriate for you to be in our mentoring program. My biggest fear is that we have the knowledge to help people become better traders, and the fact that they just won't step forward, that they'll keep beating their heads against the market wall and thinking that they're going to get it. So this is Mark the Meerkat Suffering. Just want you to know that 89% of traders do not make money. And of those 11% who do, about 90% of them have a mentor. Think about it. Have a great weekend and trade well.